Welcome to the March 19th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace as well as offers some insight as to how we set up our charts, what time frames and indicators we use. First up, we're going to run through a few broad market averages. Then we'll take a look at a few stocks that we recently stopped out of. We're 100% cash in the model portfolio. And rather than going through a bunch of stocks that probably won't be in play, we're going to go through a technique to buy gap ups using recent gap ups in WSM and UPST on Thursday. First up is the S&P 500, which after Thursday now is a false breakout to new highs and a close below the 10-day EMA. If it's unable to hold above the 20 EMA, that will put the S&P back on a sell signal. And really, if it doesn't hold the 20, then it's only, as of Thursday's close, just 1.3%
onto the Nasdaq
off
Composite.
the 50 MA. So could revisit the 50 pretty quickly if conditions continue to deteriorate. Broke its downtrend line. Tried to push through the 50 MA. Had an ugly close on 316. Not a great day, but the following session was a pretty solid day. But Thursday's reaction to the Fed rally is horrible. The price opened significantly lower and wiped out the prior day's reversal candle. It closed below the 10, 20, and the 50 MAs in one shot. So now we're looking at the Nasdaq at the very least, I believe, touching this downtrend line. See if it can find support in that area, maybe around the 12,900 area. And there's always a possibility, again, that we could see a test of the 12,500 area or even a dip below this prior low here. And the diamonds had a hangman here, which is a potential sign that the trend is weakening, but there was no follow through. And then on Thursday, there's this inverted hammer at the highs. This is also a shooting star candle. So if the price is able to hold above the 330 area, that would be a positive sign. The shooting star is confirmed by further weakness, which would be a close beneath Thursday's low. So just a quick recap. We have the S&P with a false breakout. We'll have to see if it can hold above the 20-day EMA. The Dow looks like it's showing signs of slowing down in 2 of the last 4 sessions. And the Nasdaq looks like it's about to resume its downtrend. We're going to run through a few trades that we stopped out of today. And JWN wasn't one that we stopped out of. We sold partial, I believe, up here. And we sold the rest for about a 13 or 14% gain late in the day, around 42.60. And SQ was sold as it broke down beneath the 317 and 312 reversal candles. We also sold SI as it took out the low of 317's reversal on a pickup in volume. And this is basically an outside day as well, a bearish outside day. And almost a bearish engulfing. I'm not quite sure. It might be just off, but definitely a bearish outside day where the high is a false breakout, and then you have a high that's greater than yesterday's high and a low that's less than the prior day's low. We have a Riot, which we sold for a smaller loss, and mostly because it held up better. But because SI wasn't looking too good, we decided to exit Riot ahead of the stop. And then we had Twitter, which Twitter undercut the reversal low of 317, so it stopped us out. So again, we're back to cash for now, and we'll just have to see how things play out. All right, next up is just a quick lesson on how we buy breakaway gap ups. Mostly these are discussed in the plan out ahead of time. because it's a really tough play to anticipate. We don't know where the stock's going to open nor how it will react after it opens, so it's not something we can. But we can take advantage of these setups in the live trading room when they occur. And so here's a quick lesson on how to buy gap ups using a 1 and 5 minute chart. What we're looking for is a breakaway gap up. It doesn't really have to be a breakaway gap up, but it's got to be a significant gap up. And in WSM, we get a significant gap up and a breakaway gap up. Breakaway means it's gapping above the highs of the basing pattern. And usually pre-market volume will be solid. And then we'll see during the first minute of trading, there'll be a big spike. But looking at the chart, the 1 minute chart on the right, so first thing, we want to see what's going on pre-market. And ideally, the 1 minute high will be above the pre-market high. So if we're looking to buy on the open, we're waiting at least 1 minute. So in this situation here, with WSM, it was a little bit tricky in that it broke out 10 minutes before the open above the pre-market high, and then the last candle before the open, or the second to last candle before the open, there was a spike to 160.60. And so then we have the open right here with a high of 159.88. And then the price, the very next bar, busting through the 1 minute high. And if you didn't see this prior high right here, this would be the buy. But since you're right up against the pre-market high, we'd want to go over the pre-market and the 1 minute high in this scenario. So nothing really triggers on the open. And if the 1 minute bar isn't used for the trigger right away, then we could switch to the 5. The pre-market high and the first 5 minutes of trading, the highs are almost the same. So it isn't until later in the morning, right around 10:15, where the price action finally trades through the pre-market and 5 minute high, and that would be the buy entry. And there was some decent follow through today, and of course the price pulled back in the afternoon, which was mostly due to a weak market. But whether or not this particular breakout works, it's more about what to look for. And on to UPST, which is interesting because it's a little bit different in that the pre-market trading is in a tight range and it breaks down prior to the open. Now what makes this interesting is that ideally we'd like the price action during the first minute to trade through the pre-market high. But in this scenario, the first minute of trading undercut the low of the pre-market session, which is very interesting. If the price can get back through the 1 minute high, it does make for a very low risk situation, taking into consideration the pre-market trading. So it's either going to hold up here or it's really going to break down. However, as I mentioned in the last example, we prefer to see the 1 minute high over the pre-market high, and clearly a break through the 1 minute high is still well below the pre-market high here. So we can switch to the 5 minute chart and see here's the pre-market high, and then here's the 5 minute high at 92. So we've yet to take an entry because the 1 minute high was below the pre-market high, and now we're waiting for the 5 minute high to print, which is now at 92, and the 5 minute high now is above the pre-market high. So it's all clear, and the trade is triggered on the next bar. Now our stop is automatically placed 10% lower or 11.5% lower in this situation, which means it'd be really tough to load up on this stock. It certainly had explosive potential, but that's a pretty wide stop, so you probably have to adjust your share size. And the price action followed through nicely to the upside and had a monster day. And I think the closing price on the gap up day is important as well. And since this is such just a ridiculous bar here, let's go back to WSM. And WSM closed above the open, so if I was establishing a position and I'm long from 160, I have a stop about 4.5% away, 5% away. If I have partial size on, that's not a big deal, and this close is fine. If I have a half position on, this close is still fine. If I have a full position on, I'd still probably hold on to it. And if the price is trading near the lows of the session into the close, that's just something I'm probably going to get rid of totally, and not even wait for a break of this low. And, you know, you can always get back in the next day if the price action were to open higher and show some strength. All right, that's a wrap for this video. Thanks for watching, and we'll see you next week.